US President Donald Trump has frequently touted strong economic growth, pointing to market gains amid rising tensions. And a new report from Moody's reveals growing risks at the banking system, with private credit booming amid deeper economic vulnerabilities. Take a look at this next report for more details.
Among the many claims made by US President Donald Trump, economic growth is a recurring one. He has often pointed to strong markets, tariffs and raising investments as proof of a resilient economy, but beneath those headlines, Moody's paints a more complex picture. According to its latest report, US banks have lent nearly $300 billion to private credit providers as of June 2025. This makes it one of the fastest growing segments in finance. Private credit now makes up over a tenth of all US bank loans. As lenders find it safer to finance private debt funds rather than lend directly to risky borrowers, but Moody's warns that rapid growth in this opaque segment could expose banks to new risks if credit quality deteriorates. Amid this lending boom, some experts are sounding the alarm on America's deeper economic fragility, while Trump believes tariff revenues can eventually pay off the unprecedented debt of almost $38 trillion, a number that combines all gold, silver and Bitcoin in the world, but would still fall short by $3 trillion. Financial expert Simon Dixon warns that the U.S. economy's debt is becoming its biggest vulnerability. He argues that since the dollar itself represents a form of debt, paying it down too aggressively could trigger extreme consequences, even a depression. At the same time, tariffs, rising borrowing costs and growing fiscal deficits are creating what Dixon calls a precarious financial landscape. His concerns are echoed in the real economy. 5 of 8 U.S. defaults in September stemmed from bankruptcies, according to S&P Global. Failures at Tricolor Holdings and First Brands Group are stark reminders of how credit stress can spread quickly across sectors like autos, consumer goods, and healthcare, especially when liquidity dries up. Adding to those warnings, JP Morgan CEO Jamie Dimon earlier flagged what he calls cockroaches in the $3 trillion private credit market. Unseen risks that often appear only after the first cracks form. The analogy highlights a critical truth. Once defaults begin in opaque corners of the credit market, they can multiply fast. Dimon and others fear that years of easy money and aggressive lending have built up hidden leverages across the system. As banks finance private lenders, and private lenders in turn fund highly leveraged firms, the layers of debt are stacking up faster than the economy's ability to absorb shocks. For investors and policymakers alike, the message is clear. A booming economy on paper can still be built on fragile foundations. Business Bureau, WION, World is One.